with the interest rates?
You know, it's really interesting. So at the beginning of this, interest rates dropped like a rock, right? So prime dropped, I think, two or three times. Sorry, I don't keep up on up on how much. It's just changed a lot.
Yeah.
And fixed interest rates were going down because the bond market was going down.
Right.
And typically, when you see the bond market go down, you'll see the fixed interest rates reduce. So my phone would be ringing off the hook saying, oh, rates are so low. And what was happening is the banks were very worried about liquidity, so they were not adjusting the interest rates in relation to where they should be, given what the market was doing.
Yeah.
Now we're seeing them go down. So we actually saw at the very beginning of it, we saw rates drop. Then we saw rates start going up a little bit. Now we're starting to see them go back down again.
Okay.
So like a typical 5-year with a known lender, remember, it's always from a client's perspective, you're going to see a really nice low rate out advertised on the internet, but it might not be a lender you want to deal with for one reason or another, or a lender you can deal with. So you have to be careful about that. Okay. But we're seeing 2.54 for a 5-year. It's a nice low interest rate.
Right.
And that's an insured file. So again, there's some difference. Clients need to be aware that not the rates that they see on the internet are definitely applied to every single client situation.
Okay. Sorry, Mar, I have one kind of follow-up question to that. It's not COVID related, but can you tell people what the benefit is of dealing with a mortgage broker versus them going directly into a branch and dealing with somebody there?
Yeah, I can tell you it from both perspectives.
Okay.
It's kind of cool.
Yes.
So from a COVID perspective, we're used to working in this environment, right? We're very used to working online, meetings via Zoom, mind you. Lots of times I prefer to meet my clients face to face, but we're used to this platform, and it's always been the way we've dealt with our lenders. So we've always went through email and systems, okay? So with the bank, especially now, trying to get in with limited appointments, limited access to going into the bank, we're finding it easier to deal with us right now because clients can come to us and we can take them to their lender, even if it's one that we deal with. So that's the COVID reason. But the other reason is, why would you want to have somebody shopping around for you, right? If it's a deal that is done like an insured file, 5% down, really, we're your advocate. We act as an intermediate between the client and the lender pays us. So they get, all my years of advice. Don't ask me how old I am, but I am, and how long I've been in the business, and they don't fit to pay for it, right? So,
can you also explain how? So the beacon score related to their credit scoring is affected if they decide to contact 5 lenders on their own.
There's some correlation to it, Elaine, but that doesn't apply to every person either.
Okay.
There's no exact science with the number of inquiries on somebody's credit, but if it's somebody who's got weaker credit or in what I call credit repair mode, they shouldn't let more than 1 or 2 people look at their credit.
Okay.
It looks like they're seeking credit and not getting it.
Right. Okay.
Somebody who has A credit, letting a few people look at it isn't really going to hurt them.
Okay.
But in our world, if I pull the credit, 80 to 90% of the lenders look at the credit that I pull. So
right.
It's 1 pull, not 3 pulls. And coming through our door, we're going to negotiate your rate.
Right.
Going through the front door, you're going to have to negotiate your rate.
Right.
Doesn't mean you won't necessarily get the same rate that I've negotiated, but you're not going to know for sure.
Right. Okay. Perfect.
Next question that we've been getting, are there any, you kind of went over it, but are there any other special offers or special programs that lenders are offering that could be beneficial to buyers or anybody really right now?
If I talk from the buyer side, we had 2 major lenders that have offered a product that it actually could be quite beneficial, especially if COVID is a concern. So it's a cashback product. It can't be used for down payment. the rate is slightly increased, but it can help them to reduce some debt, okay? Right, up to 3% cash back. It could help pay their closing costs, or it could give them that small little nest egg that they feel they need because of COVID. Right.
Okay.
So, and the rate is not, I mean, it's higher, but it's not like out of this world higher, right?
When somebody signs up for that, though, they have to get through their whole 5-year term. They wouldn't be able to get out of that deal. Is that right? Like
they can, but you can't with any. If you're taking a fixed interest rate, you're really locked to that lender.
Right.
So, and if you want to pay it out, it's prorated. Like you pay the cash back, but it is prorated.
Okay.